So you can see there's been a huge drop in realized, excluding today's move. A huge drop off in realized from about 80 down to 50 on Bitcoin. A similar sort of story on ETH, where we went down from closer to 100 and we're into sort of the mid 50s. So that's this yellow line dropping down far below the implied. So the implied, you'll see, are pretty flat on the week, right? The implies didn't do too much on the week, whereas the realized just completely fell off a cliff and went down like that. So we had said that this negative carry would not persist last week, right? We said realize is probably going to either come down or implies are going to get dragged up. You know, one of the actually all that happened, implied state where they were, and realize just completely collapsed to the point where we've gone into positive carry now, quite deep positive carry actually, and that might be enough to entice the gamma sellers back into the fray, because they've probably been a little bit shy. They keep getting chopped about in this market. So now that there's so much positive carry back, watch out for that. There may be some vol selling coming in. The mid-April halving date is being seen as a bit of a vol event. Implied, which is why I think implied vols are staying rich as well relative to realized. So you may get a big vol reset in implied later in the month as that event kind of passes. And if there is still a lot of variance risk premium in the implieds, then that probably does get taken out. And then this week, non-farm payrolls is our major macro data point. Rates vol has been getting hammered though. So we don't really see non-farms as being such a huge catalyst even for macro markets. And therefore, if it's not, then for crypto markets, it'll be even less so. So I don't think non-farm is going to move the market that much. I could be wrong, but my sort of view is based on the idea that rates vols are signaling that rates aren't going to do anything too crazy. So these data points are going to be a little bit less important for near-term market fluctuations. Okay. So then looking at term structure, not massive moves. We're seeing we saw a bit of a drift in the middle part of the curve, kind of April to June expiries here. So you can see that middle part. We have had a little bounce in the front end, taking the curve more flat again. So we were in a steeper contango, but with today's drop, we have got a bit more of a flat curve with the front end weeklies catching like a bit of a bid as people rush for a bit of gamma. Longer dated vols unchanged though, still sitting in the low 80s. And then skew wise, we're seeing a general shift in towards put skew. That front end skew inverting into puts in the weeklies. That's continued to propagate this morning as the markets have come off. So in general, we're seeing call skew still, pretty steep call skew out to the long end, as we did see some call buying activity, but the short end is very much input skew as the kind of near-term risks are to the downside, according to the options market. And certainly the price action is backing that up. Ethereum, more positive bids. Not really seeing any buckets down in vol. We saw unchanged in the middle in April, but we saw front end up and the back end up about 2 points as well. So in general, Ethereum vol holding up much better because the price action has been weaker. There's been less of a bullish narrative around that recently. And so that vol really hanging in there and accelerating again today as we've seen quite a steep drop. Skew, same story as Bitcoin, but more dramatic. So we are seeing call skew persist in the long end, but everything shifting towards the put side. And those weeklies have gone really quite extreme today. That front week is again bordering on nearly 10 vols for puts last checked in terms of the real-time data. Okay, in terms of the vol spread, it did pop on the week. It's back up to about 5 vols in the front end. Realize it's kind of in line with realize on a 10-day, which is at around 5 as well, although 30 days more in favor of Ethereum. But we are seeing that Ethereum vol going down less, therefore the spread moving up. That's the way the spread's moving up. It's not Ethereum vols going up, it's just not going down as much. And then the spot spread has been looking pretty weak recently, kind of still towards the lower end of the range, and kind of slowly grinding even lower. Hasn't really broken conclusively below the bottom end of the range, although it might be kind of doing that today. If it does do that, there's quite a lot more downside in that cross, Ethereum versus Bitcoin. So that is partly why the put skew is so well bid on Ethereum, because its underperformance could get quite a bit worse on a technical break of that BTC ETH spread that people are kind of tracking and looking at. So that, and then not only is the kind of high beta asset and the poor technicals for ETH, you've also got the ETF flows in the near term that are still coming, and you've got the Bitcoin halving narrative. So those factors are going to make people less inclined to buy puts on Bitcoin and more inclined to buy puts on Ethereum. And then based on that idea, you can see that clearly on this chart where 1 month skew, Ethereum skews kind of was around 3 vols for puts, whereas Bitcoin was still 1 vol for calls, although that has all of these have kind of moved in this direction today. Whereas the long end is not, where I say long end, longer end, like 3 months, still parked at around 3 or 4 vols for calls it was. So it just shows that all of these short-term pullbacks, that's what they're priced as in the options market. Given that we're in this bull market sort of mode, dips are for buying. Dips can get aggressive, they can get violent, they can trigger liquidation cascades, but once they're done, and people buy, right? And the fundamental story macro driver is intact. So that is why we see persistently a cool skew in the long end, and we see put skew sporadically coming on the short end as people pile in for short-term protection, but they don't want to be parked in that for a long time. They just want to monetize that on 10-20% sell-offs and then move on, basically. So that's, no one's got any real interest in buying like 6-month protection in these cryptos right now. And to be fair, that's been the right call because all these dips have been very short-lived. So we'll see if this one turns out to be the same, but I've got no real reason to believe that it isn't. It's just a question of how far does it want to dip, and that's going to depend a little bit on how much of the positioning is going to get flushed out or not, right? So and if we get any interesting moves out of the dollar and the macro later this week, basically. Okay, so those are my kind of vol insights and what I'm seeing in my analytics. Jumping over to what we saw in the flows, volumes were down quite hard, another 20% lower, so down to about 8 billion on Bitcoin. 26th of April was an active expiry, obviously, with the halving plays. We saw hedging. We've continued to see hedging, but we saw hedging, 72K puts getting bought outright, 66, 80K risk reversals in April as well. But there were some bullish trades too last week. We had the call spreads getting bought 70K, 85K in April. We saw some put spreads getting sold 60K, 55K. And then long dated call buyers were seen. We already saw the September 90K calls previously, some more of those, but we saw a big clip of December 100K strikes. And even March next year, March 25, now that that's a listed expiry, we saw 200K strike calls getting bought in that expiry. So people really pushing further out the time and further out the skew on the upside to really get some leverage for a longer term move, thinking that this thing's got a lot more upside longer term. All right, Ethereum flows. We saw volumes hammered down 30% to just under 5 billion. The sort of mainly bearish flows I've circled here, all these puts anywhere from 3,600 all the way down to what have we got? 3,100 puts getting bought. We did see a put spread, so that 2,600 is a sale. So we saw a put spread getting bought in the far out of the money stuff, although it's getting closer and closer to the money as we speak. But now we've got some deep in the money puts at the 3,600s that are probably going to get monetized, rolled down, things like that. And then on the upside, it was mainly the 4,000 calls getting bought in April, either on their own or as part of calendar structures where they would sell further out of the money maze as a bit of a funding leg. So that was a popular trade last week. In terms of how the gamma situation is, we did see, bear with me a sec. Schoolboy error, should have obviously turned off my phone. But anyway, looking at the gamma side of things, we've got the dealer gamma did go deeply negative on Bitcoin. So you can see we accelerated lower, reached kind of near 100 million short into expiry. But to be honest, that didn't create too much volatility. We chopped around a bit. We kind of stayed around those big 70K strikes. Now that that's been cleaned up and we've got April, the big one, we've got a big 70K strike on April short. And then below that, we've got that 30, not 30, we've got this kind of 66K in April as well. So you can see the shorter dated expiries, which are like the red and the blue, they're not quite as big in terms of their size, but you see the April buckets are bigger. Now, if we were to really crack lower back onto a 50 handle, we have got some long strikes coming back. But in general, the street is short. We're back to the kind of similar short that we started last week. But like I said, that 70K area seems to be the big one. So if we gravitate there into the end of April, then that gamma position will explode on that as well. The ETH dealer gamma did move into negative briefly, but then popped again to positive. It's still positive right now. Most of the positive, though, is on the upside. So as we sell off, we are moving away from the longs and towards the shorts. We've got big pillars at 3,000 and 3,600 on the downside. The dealers look like they're short. So that's what's going to provide some short gamma. But we'll probably see some fresh flows as well that take dealers out of stuff as well. So in general, I think the ETH dealer positioning is dropping. Bitcoin's already negative. So in general, that positioning should lead to instability. But we kind of think bigger forces are at play right now than the gamma positioning. And obviously, there's some de-risking going on right now. So the whole space is coming under a bit of pressure. That's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.